Good morning, everybody. It is Wednesday, March 29, just coming on 6 o'clock. And you have some advanced Fuckery and an absolutely gorgeous VIX down here at 1912, the August lows. Go over again. Data. 3 green closes in a row yesterday. Got that red close and come back over onto where we are over in the spread room. And I've got a trade out there already this morning, 5:30. I threw that out there. As I threw out early in the morning yesterday, 8 o'clock. If you're safe, if you're scared, sell all the credit you want to do above 4,000. 4,005, 4,000, 4010, 40,005. Sell it all. Do all the selling you want to do above 4,000. You're going to take it all home. And then Elongate even message said, today's the kind of day that you go very large and collect. And everybody that did, I saw all your direct messages send it over to me, and everyone had the exact same reaction.
Yes! 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 Yes!
And that is why you do these spreadsheets, and you go out there every day and you put it and copy and color code it, and you will see things that other people don't see. And when you see it, you will crush it. And that's what we did. So closing there, and we got down to that 39.51, and it wouldn't give up. Wouldn't give up. And then what we did was we come over here and we're looking over at our spreads, and nothing. No plus 1% in the 4,000s, no minus 1% down at that 200-day moving average. Got 100% on that 39.95, 39.90. And as of right now, it looks as if we are opening at around 4,004. Futures are up almost 1%. Almost. They are up 38 points. Now, granted, they were up a little bit after the market closed already, so not necessarily 1% over here on the SPX. 4010.98 being our plus 1%. And I will once again continue to stress, we have one close above 4,000 since we posted the high of the month. One close above 4,000. And what we're looking at here over the last week and a half, 4,009, 4,007, 4,039 on FOMC day, which sold off to 39.36, 4,004 earlier in the week. Now, we do have some stuff to consider, and it needs very strongly to be considered. 39.63.34. This is your monthly candle. This ends on Friday. 39.63.34. Above it, below it, you're getting a red or a green month. This week, being that we have 2 consecutive green weeks and have not had greater than 2 consecutive green weeks since that August rally, starts at 39.82.93. That also needs to be considered as we go into Friday, the end of the week. So, very quickly, this is what you got so far this morning when you wake up, and I'll show you why you got it. But I want to bring you back to yesterday for those that don't have the same kind of memory that I do. We had 3 green closes in a row going into yesterday. 3 in a row is rare. 4 is even more rare. However, we had 3 in a row, March 236. Minus 7% followed. We had 3 in a row, January 31.12, when we posted the high of the month, high of the year, I mean. Minus 6% followed. We had 4 in a row during the course of January, 10, 11, 12, 13. minus 3% followed. And prior to 2023, when we were there in November, 4, 7, and 8, right off the November lows, coming off that dip, the very next day, after we had done our 3 in a row, we got a minus 3% followed the very next day. So, mathematical computations, 39.71 close. 39.31 is minus 1%. 1%. Want to take it here from 39.77.53? 39.37.75 is minus 1%. Only one. Everything that we look at is telling us that it is going to be a little bit greater than that, but that doesn't matter. We'll take you into where we are right now, and this is your SPX coming off of the FOMC, that 6% run that we had off of that low 38.08. You had your 3% dip down here to 39.09. Had our little bounce, that Friday fuckery that we had last week. Monday gap up 4,002. Very significant, very important 4,002. And then we just flailed off here into yesterday's 39.51. Where we're at right now is the futures have taken off of yesterday's low right there, 39.80.75. Same thing as at SPX 39.50. And as you see the close here and the Lululemon spikery, all night long, this has done nothing but go straight, right for that 40.42. Zoom you out a little bit more, 10 days. You see this 40.42 right here. You see 40.42 right across there. You see 40.42, and then you see the FOMC spike. Take you back on your data. And again, with your data, 4009, 4007, 4003. That's the same thing as what you have there on the ES for your 4042. 4042, 4042. Take this out a little bit wider, go 30 days. And now you're looking over here at February. No, this is not February. This is the March highs, 4078. And you're looking at that 4042, 4042 right across there, that 4042. So nothing to say of anything other than I don't have any models that are pointing for us to be making a very strong bullish bounce and completely obliterating everything that's out there, being that we have right here 4,766 right there. And that's right around where we're looking to open up right now as we got this gap that will need to be filled right around that 4,766. 4,017.81, just up above that. And then you have your FOMC spike. So nothing to go out there and say, yes, we're going for it. And here's your Lululemon. Of course, Lululemon is very good to own down here at 285. And as it came down here below the COVID highs and how it was trading below 50% from the COVID lows, the retracement, below the 2021 open, still 38.2 retracement to the all-time lows, and you get a move like this coming off of earnings. It's absolutely nothing to go out there and start jerking off on and saying, we're going to the moon, we're going everywhere. And if you would just load up, it would be really nice. So we'll leave Lululemon to come back to. And here is the bread and butter, the wings, the fucking squats of the market. And that's your QQQ. And here we are on the QQQ coming off that 315 spike last week, that visit up to 313. This over here on the weekend, how we opened up here and fell out below the Kramer tweet, below the Toyota Corolla, and we're back above the Toyota Corolla over here at 310. So again, nothing absolutely beautiful that goes out there and says, yes, you have to be getting into this. We've got to be getting into calls today, because what you're going to wind up getting into if you do something like that is this. So great day to sit back, enjoy the winnings from yesterday. Every one of you that was in the spreads, sit back, enjoy, suck it up, do nothing but relax, and look how your VIX is over here on your August lows. Threw it out even more, and you've got your April lows, and very possibly even to that big 1811, maybe getting 1811. And as you can see, without even having to draw any lines, the viciousness of the reaction that will wind up coming out of this VIX, and again, make it very stressed. I am not bearish calling for a bear market. I am looking for a very, very good dip that can be very aggressively bought into as we head into April and the end of April and using the full moon and going into earnings season. And I hope you enjoy your Wednesday. Tacos were delicious. If you were in the spreads room, puts and calls, smallest trading session of the year, 27.67 point range, 33 the day before that. Got lucky with calls or playing the puts over there on Monday. Yesterday, they were getting you 20 and 30% maximum. Had a 28-point range earlier in the year at February 28th. This is a credit spread seller's dream come true. Have a fantastic Wednesday. I will see you in the chat room.